Hello traders, this is Rich Derrick from Tradesight. Wanted to take a few minutes here and take a look at the setup and the chart pattern of Apple. I know all eyes have been on Apple the last few days as it's been reaching down to retest that prior low at 505 and 3/4. On Friday, December 14th, it did undercut that level, made a new nominal low, and left kind of a very difficult looking pattern on the chart here. Doesn't look like something that most people would be interested in on the long side, but I just wanted to point out that our seeker that we've been waiting for to count down to an exhaustion entry has now flashed a high probability buy signal. And let me just take a moment here. This is the naked chart that we're looking at right now. Let me apply the seeker to it and talk about this setup as far as the seeker goes. Now here's a look at the Apple chart with the seeker study overlaid. What I wanted to point out was that we are now set up with a 13 buy signal on Apple. We had our 1 through 9 setup phase complete, and then we drove down to candle 8 here on this very aggressive day. This is the day when we had that pretty extreme hammer bottom set up that produced this reflexive rally to the upside. But while this rally looked good and we had this little breakaway gap, we here at Tradesight were expecting another decline back down because this seeker buy countdown had yet to complete. We only gotten to bar 8, and we need to get all the way to 13. We counted 9 over here once we started to decline again. Got to 12, had a couple deferrals here, and now on this candle we're getting our 13. You don't see the 13 on this chart because it won't print until we open the new candle on Monday. But that will be there as soon as the first trade takes place. So we've got our 13 exhaustion here. We've got a new low in the chart. It looks very precarious, but it's a high probability buy, and it's really essentially a retest of this prior candle. But what it really did was it effectively just washed out all of these buyers up in this area who bought a little bit too early here off this hammer. Now it doesn't mean they all lost money. I'm sure a lot of smart traders got back on the long side here after that breakaway gap and played this reflexive rally really nicely. But it was really a rental and not a long-term ownership proposition because we had yet to record that 13th candle of the buy signal, which is now in place. So the question is, how do we approach this today, and when do we go to enter this? Well, there's really 3 ways to do it. The first one would be the most conservative would be to wait till we get a close back above the 10 EMA, which we define as the short-term trend. You can see in this breakaway candle up here, we popped back above it and settled nicely above it and lifted price quite a ways up here on the long side. So we went short-term positive up here. So what we're going to be looking for is the conservative folks are going to be looking for a short-term positive trade going back above the 10 EMA on a closing basis. And that would be for the conservative swing traders who are looking for a real turn in the stock and don't mind waiting quite a few points until the stock proves itself. The next most aggressive entry is going to be a break into this gap. So it'll be a break above this little window here into above Friday's high. And then the most aggressive posture is going to be to take a long over the first 5-minute high that's positive. So those are all ways to look at this, and of course we have to manage the trade as well. So let me give you a couple of thoughts on how to manage that. Here's a look graphically of what we just talked about. Kind of ranked them 1 through 3 here. 1 being the most conservative, and 3 being the most aggressive entry. Up here we've got the break over the 10 EMA, which currently resides at 539.67. Moving more aggressively, a break into that into Friday's gap from Thursday, the Thursday-Friday gap, a break into that gap over 518.13, and then the most aggressive entry is going to be could possibly even be right out of the chute depending on how things set up today. That'll be a break over that first 5-minute high. Now, of course, every trade has to have a proper risk level assigned to it and proper money management techniques used. So the way to give it the most room, this would be for the swing traders who are looking for the real swing, would be to use the risk level from the Seeker study, which is automatically plotted using an objective methodology. Now what we're going to do is we're going to take the low from Friday, which was 505.58, and we're going to subtract the true range of that candle. That true range would be the size of the real body, which was relatively small, but also included that large gap from Thursday. So we settled on Thursday at 529.69, and we printed that low of 505.58. That makes 24.11 the range. So what we're going to do is we're going to take that range of 24.11, subtract it from from the low of the candle. That's our 13 candle. And so if you take the low 505.5, subtract 24 from it, we're going to come up with 481.47. So 481.47 is going to be the risk level that's going to be assigned from the Seeker program. The other alternative entry is going to be to use the swing low, which is that intraday low on the chart there at 505.58. And then the tightest stop that you can use is going to be the low of the entry day's candle. Now another thing to think about though is also you could also assign 1 and 1, which would be, if you're going to be the most conservative, you're looking for the longest play, wait for the break above the 10 EMA, and then the classic stop is going to be to use that risk level. That's going to allow you the most amount of wiggle room and also the potential to stay in the best potential to stay in the trade. If you're breaking into the gap and taking that entry, you might want to consider 2 to 2 here, which would be to use that gap entry at over 518.13, and then use that swing low at 505.58. And then for the 5-minute high, if you're trying to be a little bit shorter term here, take that 5-minute high and then you use the low of the day's candle that's in progress that you're working within. So a couple things to think about. Definitely going to be watching this closely. If this thing has a little bit more work to do, where they really have to sort things out a little bit more, that risk level is going to become very important and will actually be a very, very important support or breakdown level if it's breached. So definitely keep an eye on that 481.47. That's going to be very important going forward. So if you have any questions on this, please feel free to pop into the lab. You can take a free trial and ask analysts real questions at Tradesight.com. Again, thanks for listening. This is Rich Derrick. Good trading.